So I'm pretty much sure by now you've heard about Italy's 7% flat tax. You retire in Italy and you pay a flat 7% tax on everything for 10 years. But do you know what the IRS is doing while Italy is charging you 7%? When you retire to Italy, you don't leave the American tax system behind. You're still a citizen. The IRS still wants its share every year from America. And then, underneath both of those, there's a third layer that no one mentions until you're already living there. And that's municipal taxes, waste collection fees, local levies that just show up in your mailbox one day and catch you completely off guard. So I'm gonna show you the whole picture. Not the optimistic version, but the real one. What you actually pay to Italy, to the US, and to your local comune when you retire here. Real numbers, real income, no vague answers. Okay, let's start with the Italian standard tax, not the 7% tax regime. Once you become an Italian resident, and that would be 183 days after you move there, Italy, like many other countries in Europe, will tax your worldwide income. That would be your pension, your 401k, your rental income, pretty much all of it. The IRPEF, which are Italy's progressive rates, are as this table shows here. It's up to 28,000 euros per year will be a 23% tax, then up to 50,000 will be a 35% tax, and above 50,000 we're going up to 43%. It sounds high, but it's actually lower than most Western European countries. Most American retirees on a lower budget usually fall between the 23 to 35% brackets. So this is just the regular Italian full taxation system. Just on a personal note, if you move to Rome or Milan or one of the more expensive areas in Italy, because if this is your reality, your dream gets very expensive very fast. Before I talk about the 7% tax regime, I want to quickly talk about something I did. Because where you are now is pretty much where I was 3 years ago. And for the past 3 months, I've been working on a book which I put into it everything I know, and I've been doing this for a while now. And it has everything you need to know to make your move to Italy as straightforward as possible. It's a big book, it's over 70 pages, and it has in it the visas, the taxes, regions you would think about moving, healthcare, everything you need to know about that, which is very important for most of us. It's called the Italian Retirement Blueprint. And again, you get everything you need in one place, in plain English, PDF format, instant download. This is pretty much the book I wish I had when I started my journey of retirement in Italy. So you can get to it by scanning the QR code, or I will leave a link in the description below, and I hope you find it useful. Okay, let's talk about the 7% tax regime now. Italy has a 7% flat tax regime for retirees on all income, and that includes the 401k, pensions, social securities, dividends, and rental incomes from the US, pretty much everything. And this flat tax regime lasts for 10 years. And you gotta keep this in mind because let's say you retire at age 65, you got to 10 years, 75. After 75, it goes back to the IRPEF tax levels we just talked a while ago. But still, for the first 10 years, it's an amazing incentive that no other place in Europe has at this moment. The 7% tax regime is not all over Italy. It's mostly southern Italy's, and it applies to towns with under 30,000 residents. Used to be 20,000, and it changed this past May to 30,000 residents. Mostly Sicily, Calabria, and southern Italy pretty much, and smaller towns. There are some restrictions. You must not have been an Italian resident for the past 5 years. And actually this regime also takes into account the IVIE and the IVAFE, which are the wealth taxes. They also disappear under this regime. So on a personal point, if you're planning to move to southern Italy, places like Sicily, Puglia, Calabria, this regime was pretty much built for you. So make sure you run the numbers before you assume you don't qualify. So what is the IRS still taking? The US taxes your worldwide income as long as you're an American citizen, regardless of where you live. So moving to Italy doesn't end your US tax obligations. You still have to file your US tax returns every year forever, as long as you hold a US passport. So the foreign tax rate works like this. If you own 15% to the IRS and you pay 7% of it for the flat tax rate in Italy, you will still have to pay the extra 8% to the IRS in the US. There still is the F-bar, which is if your Italian account exceeds $10,000 at any point, you have to report it to the US Treasury, and this is pretty much non-negotiable. So even when you move to Italy and you think you're paying your taxes there, you should know that the American taxes are still gonna come. So always factor that in as well. 7% is for Italy. The US is still following you no matter where you live around the world. Then there's the third layer, which is the local taxes above everything else. You have the TARI, which is the annual waste collection tax. Everyone in Italy has it, no matter where you live, no matter what tax regime you're under. This is like the god of taxes in Italy. Typically, it's between 150 and 400 euros per year, depending on where you live and your home size. Then there's the IMU, which is the property tax. It is paid on any property you own Italian, as long as it's not your primary residence. It is roughly between 0.76% to 1.06% of the cadastral value. So if your Italian home is your primary resident home, you're exempt from the IMU tax. You have stamp duty in the Italian banks, which is about 34 euros per year. If your account balance exceeds 5,000 euros, there is stamp duty on investment portfolios held by intermediaries, and that is 0.2% per year. Then there's the codice fiscale, which is it's free, but you have to get it. It's required for everything, and you should get it before you arrive to Italy. So none of these will break you, but nobody budget for them, and it's another 500 to 800 euros per year, and I think you should budget for it. So let's take a sample here and check the real numbers for a couple retiring in Italy. Let's say you're a couple with $2,000 of Social Security each and $500 401k distribution each, and that will give you a total foreign income of $60,000 per year. Without the 7% tax regime, I mean with standard IRPEF, your Italian income tax would be about 8,400 euros, which is the 23% bracket after deductions. US taxes after the foreign tax credit would be about $1,200. Local taxes, the TARI, IMU, stamp duties, we're talking about $600 here. So the total annual tax bill, about $1,100, more like $11,500 for a couple. Now let's move to the 7% tax regime. The Italian flat tax will be 3,000 euros, which is 7% of the 42,000 euros, because Social Security is excluded from that. The US tax after the foreign tax credit will be about $2,100. Again, you have the same local taxes. They're not covered by the 7% flat tax, so that's another 600 euros. So your total annual bill will be about 6,500 euros for the both of you. The difference here is 5,000 euros per year over 10 years. We're talking 50,000 euros in total. That's the number. That's a big number, and that's why the regime matters. Okay, this is me with a different shirt because this thing is very important. If you've been following this video, you've probably noticed that some of the numbers haven't been really adding up exactly as the charts show. And you're right, and here's why. Like everything else in Italy, there are several correct answers to most questions. The way you interpret the situation can and will give you different results depending on who you talk to, who does your taxes, and on Tuesday, it can still be a different answer. The US-Italy tax treaty sounds straightforward, but it isn't. Different tax specialists read the same article and can reach different conclusions. The 401k distributions could be classified as pensions income and taxed as progressive IRPEF rates, or they could be treated as investment income and taxed at a flat 26% rate on the growth element only. Same money, completely different tax bill. Both technically defensible. And then there's Social Security. I consulted directly with the US-Italy cross-border tax specialist I work with. They are a very established firm in Milano, and their position is clear. For American residents residing in Italy, pensions, including Social Security, are only taxable in Italy. The US does not tax them, with one important exception, and that is if you worked in the public sector. Federal employees, state government, military, those pensions are taxed exclusively in the United States. But for everyone else, you can actually search online and you will find sources that might say the opposite of what Daniele said. But I work with them and I know that they know what they're doing. So same treaty, same article, different conclusions. This is not me hedging. This is the reality of how this system works. And then there are those who don't declare anything and can get away with it for 40 years. Not that I support that, because if you do get caught, the fines are very high and it is illegal. But as you can see in this comment I got from a viewer, I did cross his name out so he doesn't get in trouble. So if you've watched other videos or looked through other sources and got different answers to your questions, they are not necessarily wrong, and neither am I. We are both working with a system that has genuine gray areas. What this means for you is simple. The numbers I've shown are realistic estimates based on the most common interpretation. Your actual numbers require someone who knows both the US and the Italy tax system inside out, and who can look at your specific situation. So if you need a well-established firm that can help you with your requirements, contact me by email and I will send you the details. Let's continue. To live in Italy is not only a lifestyle choice, it should also be a financial choice because it matters. So the 7% tax regime is real, the savings are real, but so is the US tax bill, and so are the local charges. And the people who move to Italy successfully are those that know the numbers before they make the move and not after they arrive here. So now you know it. If you found this useful, please subscribe. If you need a cross-border Italy-US tax specialist, let me know by email. It's right here, and you can also find it in the comments below. And if you're serious about this move, I will urge you to have a look at my community. It's the Italy Relocation community. We have some great members there, great questions. I answer personally most of the questions. You have direct contact with me on a daily basis pretty much. It is a paid community, but it's worth every cent. So again, you can follow this QR code, or I'll leave a link in the description below. The next video I'm gonna do is something I've been asked a lot about by my viewers and by my community, and it's the no regret rental strategy. It's why you should never buy a home in Italy sight unseen. Always rent before. And now, watch this video next. I'm sure it's gonna be very helpful.